Good afternoon, this is Rich Nelson from Allendale covering the wrap-up commodity comments. Today is Wednesday, July 13th of 2011. Big day today here. Certainly markets reacted to a couple different pieces of news. Main one, of course, we're going to be talking about right now will be weather here. The fact that all models are now in agreement posting as sharply to actually severe heat lined up for a good chunk of pollination. Both the 6-10 day, which has the severe heat, as well as the 8 to 14 are showing that we will have some damage on yields due to high temperatures here. We've actually completed a pretty interesting and innovative study here on this high heat compared to pollination and what happens to yields. If you are a subscriber, you certainly get access to this key information here. It certainly shows how important and actually some projection on yield damage could be seen from the current forecast here. So certainly that's another reason, on top of the many others, yet to subscribe to Allendale's research. And you can do that using allendale-inc.com. Certainly sign up for a subscription there. Second issue here to speak of as far as overall commodities in general, Bernanke in his biannual address to the House Financial Services Committee actually raised the possibility of QE3. So quantitative easing, basically phase number 3 here. And keep in mind, he did not say they were going to do this. He said that it is a possibility. And this is really the first serious talk from a person of his ranking on anything close to a possible third amount of funding for support in the U.S. economy. So that certainly is something very important we all need to follow, and this affects all commodities overall here. So if there is further quantitative easing, more U.S. dollars being pumped in the U.S. economy, that will therefore be bearish to the U.S. dollar, devalues overall dollars as a whole, and that would, of course, be bullish to commodities overall. And when there is an excess funding and lower U.S. dollar, those dollars soak up into hard assets, which are commodities. Also, you'll have some people say that exports could get a boost off the low U.S. dollar as well. So certainly both these issues here today, number one is weather, number two is the possibility of QE3, were big supporters of today's big rally. U.S. dollar fell 64. Crude is up 50 cents here in the latest trades. Corn today hit 25 cents, or last trade was up 25 cents. That is just down from its touch of limit up at 30 higher. Beans up 21, and wheat up 46. As far as some other news for beans and wheat, the average trade guess for tomorrow's NOPA crush report. So keep in mind we have a report from the private industry, NOPA, and one from the government, the U.S. Census Bureau, covering previous month's crush levels for soybeans. NOPA says 118.9 million bushels for a crush level back in June. That would be down about 6% from last year. This only gives the trade 2 months to equal, to basically pump up crush enough to meet USDA's goals. USDA still has a pretty lofty goal on its crush estimate here, and to meet those numbers, July and August would have to run only 2% lower than last year. It doesn't sound like too hard of a pace to meet, but keep in mind the previous 3 months of crush have been sharply lower. Down 8%, down 6%, down 6%, and now suddenly you're supposed to rebound only down 2% in July and August. So that keeps us pretty suspicious of USDA's crush number. It may need further revision lower in the next couple months. Over on wheat, as we said, up 46 cents. Really today is really a corn day overall, but we will point out that we did gain some benefit as people are looking at spring wheat conditions, spring wheat concern, and those type of issues with the heat lined up in the next 2.5 weeks or so. As far as livestock, live cattle fell 62 cents today on the August contract. That was a surprise. Not only did we have yesterday posting stronger wholesale beef, but today actually saw some strong wholesale beef prices today as well, up roughly about $1 or so. So keep in mind that was a surprise as far as the lower futures. Main reason why is we did have some disappointing beef export information released today. Exports during May were only up about 15%. That's great, but keep in mind the previous few months we've been up 20 to 30% higher. So a little disappointing beef export information. We still expect cash cattle trade at least this week higher here, at least one more week of higher trade here before we see some of the pressure later this month. As far as the hogs end, hogs up $1.35 in the last trade on the August contract. So we do have, of course, the higher corn price providing some support. The continued talk of China picking up large amounts of U.S. pork. The third thing certainly is important for us to monitor on the weather front as well. Extreme excessive heats certainly can lower finishing performance, lower finishing weights, and also impact the breeding herd performance. And that would affect, if we have breeding herd affected by high temperatures, that actually affects breeding performance for the next 4 to 6 weeks out. So this could actually impact breeding performance not just in July, but throughout much of August. And of course, that long of a stretch of problems as far as conception and those issues here would affect longer-term, early 2012 pork production levels. So that's why high temperatures for hog production during summer are not just bullish for short-term impact on finishing weights, it's actually also bullish for long-term impact, meaning potential breeding herd problems. So overall, big day today as far as overall commodities. We'll certainly keep on top of these issues here and let you know what's going on. If you have any questions about all these interesting issues, or you want to hear more about our study on high heat during summer and pollination, we'd be happy to help you out. Give us a call, 1-800-262-7538. You can also reach us by email, or even, in fact, just subscribe to our reports and get access to us that way, allendale-inc.com. This is Rich Nelson. Have a good trading day and a good trading week.